Hello, everyone. Paul Long again here, and today we're going to talk again about our series, How to Buy a Business Using an SBA Loan, and we are going to talk about the 5 C's of credit. Now, this is a really important video because this is exactly how commercial lenders look and when they're underwriting any sort of loan. It's these 5 steps that are just absolutely critical to the success of a loan. The first, and in my eyes, one of the most important is character. Character, that is your credit score. That is you. Does the lender believe in you? Do we believe that you can purchase this business and be successful based on your business plan, based on your projections, based on your financials, based on your net worth? You. That is very important. The second is capacity. Okay, capacity is debt service coverage. If you want to learn more about debt service coverage, I have another video that talks about cash flow coverage and the debt service coverage ratio. But this is, can the business you are purchasing afford a payment for you to buy the business? What we don't want to see is you having to put in a whole bunch of your personal money into the business in order to make it cash flow. We want to make sure that the business can cash flow on its own through the debt service coverage ratio. The third is capital, down payment. Very rarely will banks and credit unions and financial institutions lend money with no money down. And business acquisitions are definitely one of those where we want to see some skin in the game, and that is down payment. And generally speaking, anywhere from 5%, 10% is the norm, 15, 20, or even more of a down payment is needed for a business acquisition. Again, 10 is kind of the norm for that. Again, do you have that capital down payment? Is that down payment borrowed, or do you have it sitting in a savings account ready to be used? One of those situations is better than the other, and I'm sure you understand it's cash in the bank. But when you have to borrow your down payment, that definitely makes a banker nervous. Collateral. What are you giving us as collateral? What is the collateral of the business you're purchasing? And a lot of times, do you have equity in a home that we can take as additional collateral? And is the home worth living in? Is it in good shape? Maybe you have a rental property that you can give as collateral? Is that in good condition? Maybe you have some commercial land or residential land that you want to give as collateral. Is it in a good location? All of that is really important when it comes to collateral. And last, but certainly not least, is conditions. Conditions. What is the lender's comfort? Now, SBA is fairly open to most industries. There are some institutions that like restaurants, some that don't. Some like construction, some don't. And so that's why there's so many lenders out there, because every lender has a different comfort level when it comes to industries. If you came to me during the height of the COVID pandemic and wanted a loan to buy a restaurant, the answer would have been no. Well, why is that? Because the conditions were so nobody knew what was going to happen. So a restaurant wasn't a really safe thing to do in the middle of the pandemic, even though I'm sure a lot of restaurant owners wanted to sell at that point. So that is conditions, is the lender's comfort and the industry. Again, hopefully this helps you out, and I look forward to seeing you on the next video. And of course, you can see all of these videos on the business acquisition series at paultlong.com. Thanks for watching.